Good morning, Wall Street winners. It is Tuesday, May the 20th, and it's still a bit of a crazy time. You ever have a dinner and then after the dinner, your stomach, things just aren't sitting well? Well, that's kind of where we are with the markets right now. Our stomachs are having a hard time digesting all the nonsense from the tariffs because it was like eating too much McDonald's, and it tastes good going down, but well, maybe in tariffs case it doesn't, but it just sits poorly in your stomach and you feel bad probably for the better part of a few days. Well, that's what we seem to be having right now in the markets. We've got a lot of nonsense news here. But really the headline is that tariffs are impacting the cost of goods. We had earnings announcements this morning from Home Depot. I'll get into those in a second. But basically, they missed on earnings. But because they didn't say what Walmart did, they towed the line. They towed the new administration's line and said they're going to do what they can to absorb the cost of tariffs, which is what Trump wanted Walmart to come out and say. And that Walmart didn't say it. But because Home Depot said it, the markets rallied behind Home Depot and sent their shares higher to the tune of a little more than $8 right now. The markets have been on a bit of a run. We're going into a U.S. long weekend with Memorial Day coming up, and usually there's a positive run up into a long weekend, and then there's the aftermath of the long weekend called the hangover that comes the following week. So expect markets to be down next week for sure, at least on the Tuesday, but maybe Tuesday, Wednesday, and Thursday. But this week, I would expect a run up. And yesterday, it was kind of bleak. I mean, it started in the red, but things went into the green by the end of the day. Now, just into the green. And we can see even in the futures here, we're kind of hovering at the even point. The NASDAQ is down the most at 0.3%, so 1/3%. The S&P is down 0.2, and the Dow's basically even or plus 5 points. So it's really doing its best to make traders and folks in the investment industry some money before the long weekend so that they can go to the Hamptons and have a great time and pay for their high-end lifestyles. If we flip over to the Yahoo Finance app, if we go across the board here, you can see where the indices yesterday ended. The S&P was up 5 points, the Dow was up 137, and then if we scroll over, the NASDAQ is now into the futures, so it won't give us the data there, but it was up slightly. Crude is down right now. It has been up. It looks like an EKG monitor there in the graph, but it is down 14 cents, but around 62.50, 55. So it's higher than it has been in probably the last month or so. It's been climbing back from the mid to high 50s. And then you've got the 10-year bond up close to 4.5%. So that's been fluctuating between 4.1 and up in the high fours, maybe even touching the fives. And then the VIX down below 20. So overall, the conditions are set up for things to be positive. I said we'll come back to Home Depot results. There we have it. So you can see that the earnings were out this morning. It's up 2.14% currently, or $8.12 at 387. It's trading at 25 times its price to earnings ratio, and its earnings are going to be declining going forward because if you look at the news announcements below, they are going to try to incorporate some of the tariff price increases into their current prices. So they're going to take a bit of a hit on the tariffs, which does tell us that tariffs increase costs, which the Trump administration has been denying unequivocally for the last few months. So we'll see whether that holds true. Either way, if their earnings are going to decrease, the price earnings multiple is going to get higher and increase, meaning that this stock becomes less attractive, and yet it's being pushed up in the pre-market. So we'll have to wait and see what we hear from Lowe's and Target this week and whether they toe the line with the U.S. administration. There must be something in it for them to toe that line because they're all going to get hammered from an earnings perspective, and typically at some point that drives your stock lower because the price earnings needs to be maintained. Anyway, turning to transport's kind of clobbered right now. I wouldn't be getting into transport. It's an iffy game. with earnings getting hit and the increase in shipments declining. So we don't have as many shipments coming into the US. There's going to be less of a need for transport and hence lower earnings on the transport front as well. Then we get into oil, and oil is doing okay today in terms of crude oil futures, hovering on where it closed on Monday, but you can see there's not a great deal of movement here. I'd be staying away from oil. I'm a little nervous around that. We haven't heard anything around the drill baby drill, and oil prices remain really below where there's a tremendous amount of profitability for the oil companies. A few years ago, when the oil companies were rocking it, it was above $90 or $100 a barrel, and they were just raking in the profits. Right now, they're getting by and breaking even, but they're not doing much more than breaking even. Then we get down into technology, and this is an interesting space. Rigetti, the first one here, or Rigetti, they announced bad earnings. They missed on their earnings a few weeks ago. The stock dropped, and now it's up almost 20%. So this one isn't, and it's up 56 cents today. Like, that's a big jump. There is some murmurs out there that Nvidia is going to pick up one of these quantum computing companies, and Rigetti is in that quantum computing space. So if they're the one that gets picked up, that stock should shoot up probably a few dollars, which is a lot in percentage terms at its current value. But this is an interesting one to keep an eye on and maybe play for the spread. You've got Nvidia. It was up 5 cents yesterday, not a lot. It's off in the pre-market today. Applied Materials, which had bad earnings, was up yesterday, but it is off in the pre-market. You've got Texas Instruments down. It's just primarily red in the NASDAQ right now, with a few exceptions. And when they are green, it's a minor increase. And that's typically because the NASDAQ is down right now. So Microsoft is off. ARM is off. It had a bad day yesterday, dropping almost $4. You've got AMD down. It was down yesterday. It's down again slightly today. I think we should see a comeback in the semis today, and some of the Mag 7 in particular. I mean, AVGO was down yesterday initially, and then it ended up back in the 230s. I think this stock has climbed back quite a lot because it was in the mid 100s just a month and a half ago after the Liberation Day announcements. Amazon is kind of holding steady. We'll see what happens there. They've got a lot of good prospects in the cloud space, but their e-commerce business is likely to suffer as we go into a recession in the US. Tesla up today, down yesterday, but up today. I would expect a short on Tesla has got to be in the works here coming up, or at least a put option a couple of months out when earnings show up again for Tesla, because I can't see them hitting earnings. And when they miss 2 quarters in a row, it has to have an effect to pull this thing down. It hasn't yet, but I think it will when we start to see the compounding on that. Then we've got Meta. And Meta held strong yesterday. It's off a little bit. I'd be buying this today at the open if it's down 223, because I expect this stock could today get up to 645, 650. I think it could make a move upwards. Netflix, great stock. I think it's priced relative to value right now in the just under 1,200 range. I'd wait for a drop in that, and then I would certainly be buying Netflix. Had some great results the last couple of quarters, and it's growing. Nvidia, again, an all-star. It's been underpriced, but it's had a big run up since April 2nd. And I think it could continue to run, especially into earnings, but I'd wait on a bit of a pullback there from the 135, and I'd probably buy NVDL to get a 2 times on that with the Granite ETF exposure. And then Google. I love Google. There's talk that Google could get broken up, and if it does, it would be worth a lot more than Google is right now. It's certainly what it's priced at. I mean, here's a great comparison. If you look at Google, it's trading at, call it 19 times forward price to earnings, which is pretty cheap for a technology stock. Then you look, and they own Waymo, which is automated self-driving. You look at Tesla. Tesla's trading at a ridiculous 196 times, and it's all based on autonomous driving and the autonomous taxi. If that materializes for Tesla, it'll materialize for Waymo, and it should shoot Google's stock way higher. And that's one of the reasons that I believe Google is significantly undervalued, and I'm holding Google for the long term. I'm not actively trading Google. And then you got TSM, and TSM is making the majority of chips, and I think TSM is just going to continue to rocket. So I'm definitely a bull on TSM. Then we get down into financials. Financials have had a great run up, but I think they're a little bit overpriced right now. I think they have to come down a little bit going into earnings. I'd expect Goldman to get down into the 560 to 580 range, and I would certainly take a bite out of that and buy some Goldman. And Morgan Stanley, if it dropped down into the 110 to 120 range, I'd pick some of that up as well heading into earnings, because I am confident that their trading volume will be positive. It sounds as though their IPOs are picking up. I don't think we'll see it add to the bottom line this quarter, but I do think we'll see it in Q3 and Q4. And then net interest income. We've heard this week when Jamie Dimon talked that net interest income is going to increase to the tune of about $1 billion to the bottom line. I think it'll bring it up to about $94.5 billion to their bottom line, which is $1 billion more than they expected. So that's very positive from that front as well. Remember, coming up this week, if you look at the events calendar, today after market, we've got Palo Alto, super strong company. We'll have to see what their results come out like, and they could be hit from a tariff perspective as well. So it'll be interesting to hear what they say on the earnings call around tariffs. Lowe's tomorrow, I think we'll see it jump if they say they're going to absorb some of the costs of tariffs and fall in line with the administration and kiss the ring of DJT. Then Thursday, you've got a Canadian bank, TD. We'll see what they come out with. The Canadian economy is in the tank. We're in a recession here in Canada. Unemployment is higher. We're getting nailed by these U.S. tariffs. It's a bleak scenario. Prices of homes in Toronto and across Canada have been decreasing. It's not a great time in Canada from an economic standpoint. And we've got a new government, which we've yet to see really any activity and forward progress on. Still early days there, so hoping to see some good things out of the new Liberal government and Prime Minister. And then Workday on Thursday and Bank of Nova Scotia and AutoZone on Friday. So that's where we are on May the 20th. We'll talk to you soon. Good luck in your trades. And if you like the videos, please hit the like and subscribe button.